I want to start out a little differently in this segment here because we have a big move again going on in, well, wouldn't you know, crude oil today. Let's take a look at West Texas Intermediate crude. Yes, sirree. We have April now up $1.73. We're now at $93.60 per barrel. We got as high as $93.90 per barrel. Remember yesterday we had that extremely wide range. It had about a $6 trading range. I believe it got up as high as $96 in the overnight trade night before last, but still surging ahead over $93.50 right now. That could be a concern here to the trade. Could be an impact on corn and soy oil too. U.S. dollar index, we have the March futures 39 points higher at 96.050, basically flat on the day. A lot of interest in the Dow these days, and boy, lots of gyrations yesterday. Several times it went down and went down about 600 points, bounced off of it and ended up in the tank. March futures down 72 points right now at 33,453. So keep that in mind as we switch over to the grains here this morning. The corn market is mixed. We have May down 1/4 cent at 672 1/4, but new crop December gaining 2 cents here this morning. On these quotes from bar chart, you have the May soybeans 22.5 higher. They're hanging on to those gains. 1657.5 for the last trade. And let's take a look at that new crop November contract. It's 8 3/4 higher at 1482 per bushel. Meanwhile, in the wheat in Chicago, we go to that May contract, and right now we're 13 1/4 higher at 865 3/4. Kansas City May wheat right now 13 3/4 higher, still above $9 at $9 3/4 cent. That'll be interesting if it hangs on to that. Minneapolis May wheat 3 higher at $9.90 3/4. Todd Bubba Horwitz joins us now. He's with BubbaTrading.com. He's based out of Chicago. What a run we have had in the soybean and wheat markets here this week, Todd.
Well, Marlon, and it looks like they're going higher. You know, we've got massive inflation that nobody wants to talk about. Okay, you've got a Federal Reserve that won't raise interest rates. You've got a government that won't reopen the oil markets here. So you're going to have this massive inflation, which is probably 3 times what they admit to on the CPI, which means that these prices got to go higher. If we want farmers to continue to be able to operate, the prices have to go higher just for them to stay at the same pace. You know, the inflation is so ridiculous, and the input costs are getting so ridiculous that, of course, we've got to keep much higher prices just to keep in pace. And of course, the supply chain is totally breaking down, which is, again, another scary thought. And it all has to do with, as you opened up with, the high cost of oil. And I think oil is going well over 100, okay, as we continue to be at the mercy of Saudi Arabia. And remember, we're just going into the true crude season, which is the driving season, which means prices automatically go up. And when they switch blends, it could get really ugly in here. And this is going to continue to be an issue going forward, which will make higher prices. But again, higher prices, we need higher profits, not only higher prices.
Yeah, that's going to be something to consider just because of the impact on input costs for producers as well. Diesel fuel, a key input cost, along with fertilizer and seed, et cetera. So thanks for pointing that out. Great information, Todd. Appreciate it. Todd Bubba Horwitz at BubbaTrading.com. We'll be back in just a moment. We'll take a look at our livestock trade next.